Welcome back. Onto some primary market activity then. GNG Electronics' IPO was fully subscribed within an hour of opening for subscription yesterday, and currently it's subscribed almost close to 16 times the total number of shares on offer. We are being joined by Sharad Khandelwal, who is the founder and managing director of GNG Electronics, and Ajay Pancholi, who is the director of the company, who are joining in. Gentlemen, good morning. Thank you for joining in, and firstly, congratulations on the response that you have received on the first day and a half for your IPO. You've mentioned that out of this proceeds that you plan on raising, the 400 crores through the fresh issue, 320 you'd be using to repay your debt. Does that now make you a debt-free company after this 320 crore is repaid?
Yes, that's correct. That makes us debt-free company.
And what about the rest of the proceeds? How do you plan on utilizing those?
After providing for the expenses, this will be for general corporate purposes, mainly for working capital only.
Okay, take that point. Mr. Pancholi, let me come to you. You do have substantial revenues coming in from export markets as well. It's around 1,056 crore rupees in FY25. Revenue within India has been 345 crore rupees. So substantial chunk coming in from exports. What kind of growth have you been seeing there? There's a lot happening with tariffs as well. So first up, how much is the exposure to, say, US? Which are the other countries that you have exposure to? And what is the growth which is likely in this particular segment?
So we've had a phenomenal acceptability of our product globally. We export to almost 38 countries across the globe. And that's what has been resonated in our revenues historically. We've initially started with a few countries and now export to over 38 countries. US contributes about 17-18% of our exports, and a large part of exports also happens in various other countries across the globe. On the overall growth perspective, we see that we have had a good trajectory and we have a good roadmap ahead in terms of how we see the opportunity going forward. We just need to execute well. On the tariff front, Sharadji, if you may want to just address it.
Yeah, on the tariff front, I think situation is very, very fluid. Still, there is some exemption on computers. But even if the tariff has to come at a later date, because things are very, very dynamic in the United States, changing very rapidly, we still have skill set and cost advantages vis-a-vis things done in America. And tariff will not come on the refurbish; it will come on new as well. So the differential will remain there. US is a very high cost economy. The wage cost per hour is very high. We between India and UAE, we have significant skill set and cost advantages that we carry, and that will remain as competitive in American market. And our business is diversified across United States, Europe, other countries as well.
So you are a refurbisher of laptops and desktops and other products as well. So I wanted to understand, how is it that the exposure outside is more? What is the plan to grow in Indian market? What is the current market share, so to say, here? Who would your competitors be in the domestic market currently?
See, our export share is more because we have gone by the price taking ability. But India remains a very, very important market for us. It's the largest nation on planet and fastest growing economy, very, very vibrant population. Refurbishing is very, very important in this country. It supports e-education, it supports GDP growth. And this is one business which is good as a business, good for employment, good for inclusivity, good for economy in general. Good for general employment. So we welcome, respect all the industry participants, but other competitors that we have are limited to region or selling to a particular set of customers. We are international. We are not. We can buy in the US, refurbish in UAE and sell to Europe, or do the other way around. We can buy in India. We can buy in UAE and sell to America and Europe. So we have multi-country presence. We have no country dependence, no particular set of customer dependence.
Yes.
So we are very unique in this. We buy from long tail, we sell to long tail, so no dependence there, and good levers over there as well.
Yeah. So just follow up on that. I wanted to understand, since India continues to be such a big market, what is the market share that you have currently? Who would your peers be? Just trying to understand the business overall.
Yeah, our market share in India is around, I can say 2-3%. Market is very, very large, so we have very big headroom. Peer comparison, I mentioned we don't have any exact peer comparison. One peer comparison mentioned in our RHP. But see, the people who are selling on a particular set of customers, we are buying from long tail of customers and primarily selling to business as the ultimate customer, business and education as the ultimate customer, India and international markets.
Most of your revenues come from laptops. Are there any plans to diversify into other business lines, Mr. Pancholi? And if I could club in one more question, what is an optimal level of margins that you can face? You are still in the high single digits. Do you expect to go to double digits sometime in the near future?
So we have capabilities across the ICT product suite. So almost 70-75% are laptops. There are computers and other ICT devices that we do. But in terms of capabilities, we have phenomenal capability, and we see a huge runway in these two products as well. So long as your question on margins is concerned, I would refrain to answer anything for this at this point of time, given the situation which we are in the midst of an IPO. So,
no worries. We'll ask you more questions on future guidance and future plans once you're listed. But thank you so much for joining in today, Mr. Khandelwal and Mr. Pancholi. We'll be speaking to you when the stock lists on exchanges as well. Thanks a lot for the conversation today. Time for a short break now. We'll get you more on the markets on the other side of the short break. Stay tuned.